Hi, I'm Andy, and today we're going to be talking about investing at market highs. So one of the questions we get a lot from clients these days is, hey, the market's at all-time highs, what should I be doing? And the quick answer is nothing. The longer answer, though, is to remove yourself from short-term thinking. Just like when you start a diet or learn a language, you're not going to lose all the way in the first week, or you're not going to be fluent in the first month. Investing is the same thing. Investing is a long-term game at the end of the day. So a record high today might look like a low in a few years as the market continues to move higher. And there's a ton of research out there that says investing at all-time highs doesn't really detract from your return, and in some cases enhances it. But the main point that we want to get across is to think that the market is at an all-time high today is to believe that a company is no longer able to grow its earnings into the future. So you're thinking that the market's at an all-time high today, it can't get any higher. What you are essentially saying is the market as a whole is as big today as it will ever be in the future. Now, if you want a quick exercise to illustrate this, I'd recommend pulling up a price chart of any of the household names that you've heard in the past few years. Apple, Amazon, Facebook, Microsoft. Go back 5 or 10 years, look to see where it was trading, 5 years ago, look at the price, and ask yourself, well, 5 years ago, this was an all-time high. Would I have been okay today if I bought Apple at $100? And my guess is you would have been. You've been pretty happy with that return. So, an all-time high today doesn't mean it's going to be an all-time high for the stock or the market forever. Now, if you're still nervous about market highs and you feel like you need to do something, we'd recommend doing a few routine maintenance items on your portfolios. Look at your asset allocations, see if it's diversified across asset classes. See if that mix of stocks and bonds you have in your portfolio is right for your risk tolerance. Those are the things that are going to keep you invested in the long term. The one thing that you don't want to do is try to time the market. As advisors, what we know is that timing the market rarely, if ever, works. It's a good story to tell your friends if you hit it right. But the chances are you're going to be a lot better off if you just stay the course and stay invested. And if you have any questions, feel free to contact us at WealthQuest. We're happy to help.